Most franchisors believe raising capital is the thing that will finally unlock their growth. In reality, raising capital too early is one of the fastest ways to permanently damage a franchise brand. Capital doesn't fix infrastructure, it amplifies it. I'm Justin Kaiser, and I've spent the last 24 years building businesses. I built a franchise brand from scratch and scaled it to over 100 franchise territories in just 3 years before an acquisition. I can tell you from experience that money is not what makes businesses scalable. The uncomfortable truth is that most franchisors don't actually need money. They need systems. They need proven unit level performance. They need support structures, and they need a real platform. Money is not a strategy, it's an accelerator. And when you pour fuel on something that's not structurally sound, you don't get scale, you get a bigger fire. This is exactly why private equity and serious investors avoid most early stage franchise brands. Not because the concepts are bad, not because the founders aren't passionate. They probably are, but because the businesses are not yet a well-oiled machine. They're just still personalities, and investors are not in the business of backing personalities. They're in the business of buying predictable systems. When founders raise capital too early, they usually use it to sell more franchises, hire more people, and create more complexity. They do this instead of using it to build the underlying architecture, which is what makes things actually work. That's why you see so many brands grow to 20, 30, or 40 locations and then quietly fizzle out. Capital doesn't solve the real problem. It just helps them reach it faster. The right time to raise money is not when you're struggling. It's not when things are feeling chaotic. And it's not when you're still trying to figure things out. The right time to raise capital is when your unit economics are proven, your systems are documented, your support model works, your performance is consistent, and your business already behaves like a platform. At that point, capital stops being life support and it starts being leverage. It stops being a crutch and it becomes a multiplier. This is the difference between using money to build infrastructure and using money to cover up structural problems. One creates enterprise value. The other just creates a more expensive version of the same business. This is also why sophisticated investors don't ask how fast you can grow. They ask how well your business holds together when it grows. Because real scale is not about speed, it's about survivability. The franchisors who win long-term aren't the ones who raise money the earliest. They're the ones who raise it last when the machine's already working. If you're a founder thinking about raising capital, the most important question is not how much can you raise? The question is, what exactly would that capital build that doesn't already exist today? And if the honest answer is more sales, more people, or more marketing, then you're not ready yet. But if the answer is infrastructure, systems, support, and platform architecture, then you're already finally thinking like a company builder instead of just a franchisor. Because raising capital should never be the thing that makes your business work. It should only be the thing that helps a working business scale. And that distinction is the difference between building a franchise brand and building a franchise platform. Now, if you're a founder or franchisor and you're thinking about raising capital or even just about scaling, the most valuable thing that you can do right now is get absolute clarity on whether your business is actually built like a platform or not. That's exactly what we do in our growth strategy sessions. It's not a sales call. It's a strategic working session where we look at your unit economics, your systems, your support structure, and your growth architecture. And then we help you see exactly where you really are and what it would take and what it would need to be built before you're ready to scale or before capital actually makes sense. If you want an honest, experienced outside perspective on how to turn what you've already built into something that can truly scale, then go to empirefranchising.com and schedule a free growth strategy session. Even that first conversation can be completely reframing on how you think about your business and its long-term value. That's the difference between building a franchise brand and building a franchise platform. And at Empire Franchising, that difference is exactly what we help founders design.